Hi again, this is Rick with AmazingAccuracy.com, and today is August 4th, 2011. It is currently 1:11 p.m. Chicago time. This is a recap of the S&P forecast video that was posted on July 25th. It would be video number 57 since I started numbering the videos to make it easy for my viewers to find these previous videos by reference. Anyway, I would highly recommend that you watch that video if you have not already, because this video is a recap. That means we are going to go and look back in time to see how things have turned out from what we were expecting to happen and was made mention of in video 57 on the S&P 500. Now, what you are currently looking at here is the monthly chart of the S&P 500, and I would like to remind everyone that when we were talking about the monthly chart in the previous video, we were looking for the month of July here that I have my cursor pointing to that had its high on resistance. We were looking for it to likely hold. The expectation was that it would likely hold, and therefore the major top made in May would remain intact as it occurred here at the end of this square time period here. And as you can see, the top of July has in fact held, and now in August, we are in 4 days into August. Today is the 4th day in August, and you can see that the S&P 500, the stock market, has dropped substantially to move lower and thus confirm the July month as a lower monthly swing top. You can go back to video number 57 and you can see that that was what we expected likely to occur. Now, going to the weekly chart, we still have the line showing here where we were expecting prices on the weekly chart likely not to exceed. Back here is the week of May 6th. That's week ending May 6th. That's the major top, and as you can see, that clearly held. And here is the top made in July, which is the week ending July 8th. And if you go to that video, this was the price bar that had formed at the time the video was made on July 25th. This is week ending July 22nd that I have highlighted here. It is an outside weekly bar. The expectation was, because it made an outside bar, and if you would like to know what that means, instead of me explaining it again ask that you please watch video 57 because I explain it clearly there. Hopefully it's clearly. And the expectation was that this bar would likely form a lower swing top. I do mention that it could form either bottom or top because of the nature of an outside bar. But the expectation was this time period right here within this red diamond time period for week ending 7/22, July 22nd, whether it was here, higher, or wherever the case may be, that prices would top and likely start moving lower into the middle of August. And as you can see already, we have started to do just that as we enter the first week of August with a substantial move down. On the daily chart, we were right here. These red bars you see here had not formed yet when that video was made, because this price bar right here that I'm highlighting with my cursor is Monday, July 25th, when I made that last video. You will recall in that video that I had put this line up here that prices were expected not to move above that line. And we had just confirmed this lower swing top of July 22nd. As you can see, what has happened here as prices have confirmed the move down and eventually the weekly swing top, which we've already seen on the weekly chart here, by prices moving below the low of the previous week low. And it has moved down ever since then. Okay, so what we discussed would likely occur in the SP 500 back in July 25th in that video, number 57, has occurred as expected. We had an opportunity here to sell the S&P 500 based on our guidelines within our membership. Of course, for those viewing the videos, you are not aware of our trading procedures. Unfortunately, of course, fortunately, you have an opportunity to do so in the future within our membership. So I highly recommend that if you are in S&P or you trade any of the other 18 markets that we have on the report, that you would give our membership a looky look. Okay? We do this stuff every single week. We just have one great opportunity after another. And if you'll look at the 50-something videos that I have made up to date, and you can see for yourself, now in hindsight, can go back and see how these forecasts continually work out. What this means is that if you know how to trade the forecast, which is what we teach and what we provide within the membership, then you have an opportunity to profit handsomely from these forecasts. But you know, I don't mind sharing this information. It helps you in some way with your own trading plan. It doesn't cost you anything. That's great too. Everybody wins. But I want to recap these videos because time makes people forget. And so I make the recaps so that we can all go back and I can help you see how things have turned out. Now I want to show you not just a recap of a previous video, but I want to give you an idea of what to expect in the near future, because I like to make sure that every one of these videos provides you with something additional, something extra that you can take with yourself and you can take and use for however you decide you want to trade these things. You don't have to trade them the way we do. You trade them any way you want. And I'm going to show you something here. Let me go ahead and bring... Okay. This here is a simple cycle envelope technique that's taught by Hurst and applied to the weekly price chart of the S&P 500. What I like to do with this method is that I like to align it up with my dynamic cycle analysis that I perform on all my markets, as well as align it up with our daily and weekly F dates, which on the charts you always see on my videos are the little red diamonds. Here is showing, and this here is just a drawing program. This is not a special program or anything. This is a drawing program. But here, what I'm showing is, here's the current week of the S&P 500. And you notice that I have it in this envelope here, and it kind of gives you an idea of the cycle pattern that it is currently trading in. This gives us clues. This is not a crystal ball, okay? That's what I use the other stuff for. This just gives us a clue as to the cycle wave that the market is currently in. And if you'll notice, the S&P is currently in a cycle wave. If we're going to go to this midterm cycle wave here that I'm currently highlighting with my cursor, I should get a draw. Let me get a drawing pin here. or yeah, a drawing pin should work good. This right here, you'll notice it's in a down slope and doesn't tend to curve up until many weeks later. This is very bearish for the SP 500. This is telling us that for weeks to come, we could be looking at a very bearish market here in the SP 500. Then within it, and let me change the colors here. Love this drawing program. Here, oops, I love it when it cooperates. Let me, there we go. Now I'll change the pin. The cycle within it, if we just kind of envelope what prices are doing here, you can see that it does the minor moves. And right now, the S&P currently is coming off of the bottom here, and it's made this new low here below the minor one, but it is still contained within the major or the midterm cycle right here. This is just basically telling me that we could be looking for a rally really soon. Let me get my pen here. Let me flatten this. There we go. That we can be looking at prices pretty soon rallying off of some bottom at this time or within the next few weeks, and then rising back up, but likely not above the previous weekly swing top that was confirmed about 4 weeks ago. This gives us a reference. We are in a downward trending cycle here. This tells us that the probability is extremely high that any weekly rally that we see simply is not likely going to go above the week that was posted. Let's just get the exact week here. Go back to the weekly chart, and that would be week 7-8. Okay, week 7-8. Let me bring that editor back in here. Okay. So that was week 7-8. So likely, using that as a reference, is that we're likely not going to see prices moving above week 7-8. So yes, prices will move down and weekly prices will move back up again, and we time each one of these moves down and moves up utilizing our weekly F dates. But as far as price references are concerned, that you can utilize this as an estimate that prices will likely continue to make lower swing tops as we come down within this mid-cycle pattern here. This that you see here is the major cycle that it's moving, all of it's moving within. So that will likely cause prices to hesitate, but it will likely move lower. And I've estimated that this time period around here is deep inside September. Okay? Deep inside September. Whoops. That we want to expect prices to be hitting the bottom of all these 3 cycle envelopes that we have here. It's around the last week of September, approximately. Okay? And this is just a rough estimate of what's going on. So anyway, I just wanted you to know that the previous forecast has occurred exactly as we anticipated it was likely to do. We've received this wonderful sell setup that we had here in the previous F date. Prices did not rise above this zone, which we expected was likely it would not do. And prices in the monthly chart have been moving down off of the May top as we figured was likely to happen. Thanks again for watching my video. If you haven't already, please subscribe to my YouTube channel so you can be informed of future videos that I post on the markets we cover. Take care.